Good afternoon. So want to put together a video, once again, just update everyone with where we are right now in the market and kind of talk about what we should be looking for in the coming days. Really, it's a follow-up from the last couple of videos that I recorded. Just going to start with indexes first. So the Qs right now, you could see we obviously broke down from this significant topping base, and we've now since retraced higher. Note that during the breakdown, the volume was elevated, and during the retracement higher, it was on light volume. So that's what you generally see when you have a short covering rally. So it's really just, it's more so, excuse me, it's more so a short covering rally, a short squeeze than any legitimate buying. So it's not a quality move higher is basically what I'm alluding to. So the bearish case, as I've highlighted several times already, would see us reject off of this general area here, off the short-term moving averages, and then continue lower. Now, if we drill down to the 195-minute time frame and we take a look at where we are, reminder what we were looking for, the first signal we were looking for that we could potentially use as a level to, act as a reversal pivot would be the retest of that 30 moving average. So you could see we broke down from that topping base. That put us in stage 4, right? We're looking at this through the lens of stage analysis, so a stage 4 downtrend. Now the first sign that we're reversing would be some kind of contact or price action close to the 30 moving average. You see it pull back and then make a higher high. So, we could very easily push lower tomorrow. Right now, so far, Meta has had a poor initial reaction to earnings. It's down about 11% last I checked. That will drag the market down. So it's going to be our first pullback following the test of that 30 moving average. We're going to get a lot of information tomorrow in the coming days as to whether or not we're going to make a lower low or the market's going to have enough strength. There's going to be enough demand now to support this prior lower low. So this is where you could start to see, you can get some kind of double bottom pattern that forms. Let's say, we come lower to this area, even potentially undercut it, but then reverse. By the time we do that, this 30 moving average will have started to, flatten out like this. And then we could look to see, then we could use this pivot as a double bottom breakout pivot point, and it will be our reversal signal. So this is where we would then look to go long, making that when we break above that pivot point. So if we look at the prior correction, which was back here, it's the same exact thing. We had our first real contact with the 30 moving average here. You can see we pushed higher. We broke above it briefly. We're then at this point, we're not acting. We're paying attention to see how the first pullback is absorbed, right? So it pulled back into the range, and it then gave us this double bottom pivot point, and we then used that pivot to go long. Same thing happened weeks later, and you could see it, just the inverse is happening up here, right? You have a double top instead. So you break above. We have our long signal here. It led to a multi-day rally, but that rally then fizzled out. We then had a failed attempt to make a higher high. By that point, we've already tested that rising 30 moving average. We have a pivot point that would be the neckline for the double top, and we then broke down. So one could then have looked to short on this day. Same thing here, but we have a double bottom and then double top. You see it just kind of clockwork. That double top and double bottom is really helpful when used in confluence with stage analysis on the short-term time frame. So we're looking for this exact scenario to play out for us on the Qs if it's truly going to see some kind of meaningful reversal, whether it be we just pull back into the range a little bit and then break higher through the neckline, or we undercut it, whatever it may be. That's what we're looking for, and what's going to support what we're going to see happening alongside that price action, building out that reversal pattern, which no predictions, it may or may not happen, would be this 30 moving average starting to flatten out. And as we break out from this pattern, you'll start to see that will curl up just like it did here. So you can see at the time we broke out here, it really started to change its trajectory. Then we broke down here. It was already actually moving lower, so that's an even more it's an even stronger signal that this move lower is probably going to be real. Broke out again, trajectory. So that's what we're looking for, right? We're just using prior cycles here to give us a general idea. You could see the FTD symbol here. That's a follow through day. So as we've covered previously, you're generally speaking, a lot of times you will have follow through days occur the same day that you get the buy signal using stage analysis in the 195 minute. So we got our buy signal here. It was a double bottom breakout. We also got a follow through day, which is when the QQQ or SPY, S&P 500 or NASDAQ move higher by 1.25% or more on volume greater than the day prior. So you have multiple buy signals happening on the same day, which is going to give you all the more reason to take some positions to the long side. And generally speaking, when you get a follow through day, you're going to get, in most instances, at least some follow through. So it's a day where I'm always adamant to put on long positions because the risk reward based off of previous circumstances is quite high. You get a pretty healthy risk reward, and the results from follow through days, generally speaking, is positive. So that's what we're looking for. We're looking for some kind of bottoming pattern. We're looking for that double bottom breakout. We're going to be capturing, you're going to see, obviously, if we were to pull in a little bit, the 20 moving average would also be now in confluence with that double bottom neckline, and we'd be taking it out at the same time. Ideally, we do consolidate within this range for another 3, 4, 5 days is what I would want, because at that point, the 50 moving average will have moved lower, and it will kind of come in confluence with that level as well. If we were to, let's say, hypothetically speaking, move lower a day or two and then break out, we'd be breaking out from a double bottom reversal pattern, but we'd be breaking out into a major resistance. So it's just not an ideal scenario, and the dynamic of that chart would just not be something I would be very willing to go long in. So I'm looking for this, in a perfect world, to stay in this range for another 3, 4, 5 days before, really 2 weeks, honestly. I would say probably like a week and a half. Let that move as low as possible so we could take that out at the same time. So that's what we're looking for the long scenario. Now, if we have a reversal like the Qs are right now, right, Meta, what is it at? So Meta is currently down 13% after hours. So it's breaking down from a topping pattern, right? We've been aware of that development for quite some time now. It's obviously not what you want to see. If big tech is rolling, that's bad news for the market. And currently they're losing that earnings battle. It's Netflix win, Netflix lose, Meta lost, Tesla won. So 2-1 right now, not the most favorable. In the most bullish markets, you're gonna get, you're gonna get 6 of the 8 that beat. So far not too good in terms of the scorecard, but we'll have to see how that develops. Now the bearish scenario for the Qs would be we reject right where we are right now, right? We break down from the base, we come back up to retest former support, and then we roll. So if you wanted to short, as I've mentioned in this morning's live session, today really would have been the most ideal time to short because the weakest names are going to be breaking down ahead of the indexes because they're leading in terms of weakness. So we talked about J&J briefly today. We saw that it was breaking down ahead of the market, right? So it already lost that short-term uptrend, whereas the Qs are still above that short-term uptrend, it's going to follow more closely the SPY. J&J, because it's a healthcare stock, right? It's not a tech stock. But you could see it already broke down and lost that support line. SPY has not lost that support line, whereas J&J did. So my point here is the weakest names are going to lead us on the way down. So this would have been the best time to take it because now let's say the market gaps. I would not be surprised to see the market gap down when foreign markets open. We could have a nice 1.5% gap down tomorrow because like I said, Meta's where the heavy hitters start with Meta. Netflix, Tesla, they are right. These are the ones that everyone are really paying attention to from here on. Meta, Microsoft, Apple, and Google. So I wouldn't be surprised to see the markets gap down tomorrow. And if the markets gap down tomorrow, well, J&J is probably going to be well out of reach and you're going to almost be chasing. So the best shorts for today, hypothetically speaking though, you can still short tomorrow because the indexes, if we do gap down, if we just look at the futures chart, which is the NASDAQ, right? Let's take a look at the trend line. Here it is. What do we got? So we did actually break down at some point today. And now we're making, so this really is the short right here, right? You'd be shorting after hours. It's kind of difficult to do that. You can, but, and that's going to be with the catalyst of a missed Meta's earnings. I really doubt it's going to reverse back to the upside. But you could see if we add these short-term moving averages, the 20 and the 10, the daily, these are the daily moving averages, but pasted on that 10-minute time frame, you could see once we broke down from this base up here, we've now retraced higher. We didn't even have enough strength to get up to that former support, now resistance, and we're reversing lower. So this would be, in a swing trader's eyes that trades pullbacks, at least per my system, this is where you would short right here. You could short the index itself, or you could short the weakest names, which, like I said, they're likely already, down here because they're going to fade more than the actual market itself it does because they're, weak. They're weaklings. So that's what's happening right now after hours. We're currently losing that uptrend support. So now the best time to short will be tomorrow, or if you did today, good for you. That was more of an anticipation short, but it made sense because you were shorting into a short-term moving averages. So these really should continue to act as resistance so long as this trend is to continue lower. But you could also short tomorrow. If we gap lower, you could let that first 10-minute candlestick close, use that low of that candlestick to short the market, and then I don't know what you would prefer as stop. You could use high of day as stop. You want to give it more room, you can use the gap high as stop. You have a bunch of different options, but that's really where we stand right now with the Qs. Right, we're looking either for that reversal pattern to take shape, which the bulls are obviously going to be tested tomorrow now because we are gapping down. Do we hold this low, or do we break lower and have another leg lower, just like we did in the prior correction? Or do we have something like this where the market moves 2.5% lower, but finds its footing just a day later and then reverses back up? That would be very similar. We could very well move lower tomorrow, and then Microsoft and Google report well, and then explode back to the upside. So really the best position is going to be no position for the next couple of days, at least for swing trading, just because you have so many moving parts currently, that being the bulk of earnings season. This is where I'm generally reducing activity just because the probabilities are not favorable. But that's kind of what I'm looking at right now with the Qs. The SPY, the same thing. We're looking for that reversal pattern to build out. Are we going to get that double bottom? Are we going to get, is this just this really looks like a bear flag, right? Is this a bear flag that's going to continue lower? Or is this the start of a reversal pattern building out? Time's going to tell. For me, my plan of action is really just to reduce activity until the end of this week, preferably until after FOMC next week. So with that said, I really quickly just want to review our gold, silver shorts. So as I covered this morning, they're acting fine. They're bear flagging right now. You got gold bear flagging into its uptrend support, as is silver, but silver a little stronger. You can see it's still a bit elevated, some air above the downtrend line. They're doing everything that a bearish chart would do as of right now. As long as you don't retrace more than 50% of that pull lower, it still has a very bearish look to it. If you also take a look at the dollar, which moves inverse gold and silver in most cases, you can see it's bull flagging. So you got gold and silver bear flagging, you got the dollar bull flagging. That's a nice concoction for a move lower in the commodities. So still sitting tight here. They still have that bearish look to them, and until that reverses, I'm sitting comfortably in those shorts. Now, what else could we take a look at? Real quick, just some potential names to keep an eye on tomorrow. So we were already looking at ACB today. We had an inside day today, so this is great once again because it's showing range contraction. Markets move the sequence of range expansion, range contraction, range expansion, range contraction. So we're getting that range contraction here. The range expansion is going to happen when the momentum enters the stock, and then it kind of is brewing up, it's loading up for the next move, it expands again. And also note that with each move higher, it's going up on heavier volume, and then when it's consolidating, it's doing it on light volume. So the volume pattern looks very healthy right here. I would be interested in it if it broke above this pivot point tomorrow, really above this high. And what I'm going to look for is there very heavy volume or is there not? There is the concern that you have a major resistance point right up here, your high volume closed candlestick. The same concept that I used to short gold, right? This high volume candlestick I shorted on this day. We knew that this would be a major resistance. It pushed higher and it tried to tackle that area, but it was unable to. So that could be the same thing that plays out ACB. It might break out tomorrow, but it might, if I do choose to enter, I will not be surprised if it pushed higher, got stomped lower, and I got, taken out. I'm very aware of the risk that this high volume closed candlestick poses, and just want to make you guys aware of that as well, although many of you probably would have spotted that without me. You also have NMM, which looks great. You can see it's moving sideways here. I really love the look of this chart. It's in a very strong group, as is ACB, by the way. So note the only stocks I'm considering to the long side, because I've been very inactive the last 2-3 weeks because we're in a market correction, is those that are in the strongest groups. If you look at NMM, it's number one in energy stock. So it's going to be, let's take a look. It's going to be obviously benefiting from the strength in energy stocks. But if you look at the group for shipping and ports, NMM is a shipping company. The whole group itself is attempting to break out of this base. So the group looks healthy, it looks great. So as a result, I'm willing to entertain these very simple, easy to identify setups. You're breaking out of this short-term base right here. And then the first target one could look for is the prior high. Or if you want to give them more room, you just let it run and hope for it to break out. But this looks great right here. Note the volume on the green days has been higher than that of the red days, which is exactly what we want to see. I'll take a look at it tomorrow if it triggers about 432. And I just want to see heavy volume coming in. If we break above it the first 10 minutes of the day, I'll use the high of that 10-minute candlestick as my entry point. And I think with this one in particular, I'll probably use prior day's low, which was today, as my stop loss. Now, some other names that aren't ready yet but could be setting up, you have DJT, Trump's company. You could see we bounced off the 200 moving average, and we've since, you can see the bounce was pretty heavy volume, it stands out, right? And we've since been bull flagging on a decrease in volume. Some buyers stepped in today, and the volume also increased, so it looks good. So maybe we're going to have an attempt here to take back that 50 moving average. If you look back here, I like to always study previous price action for any stock I'm interested in, especially if I can find a similar scenario. You can see we bounced off the 200 here, kind of consolidated. We had this strong push up, this is really not a bull flag, but I thought I saw one that was very similar, but I guess not. We tried to tackle that 200, we were unable to, and then we ended up pushing higher. So this actually looks a lot better than what we just looked at there. I just like the volume pattern, and I like the very easy to identify levels. Now the beauty of the bear flag forming just below the 50 is that we could get in right here, and we'll know about halfway through the day if we get in here and it pushes higher, 9% or whatever, and then later in the day it's all the way back lower, there's going to be a lot of wick there, and it's going to be clear, easy way to identify that there was rejection off the 50. We'll get out unscathed or for a small loss. So I do like this chart, and actually I will bump that up to the focus list for tomorrow. UAL, we've been watching very closely. You can see it's finally pulling back. This is going to need another 2-3 days, preferably 4 days. It does look a lot like Palantir though, back here where it had a beautiful move up. I'm not sure if too far too fast and needs more consolidation. We'll have to wait and see. Time will tell. And then there's also Wells Fargo. So breaking out of this base, earnings out of the way. This group, financials, has been very strong, surprisingly, despite the talk of increased rate hikes and stuff like that. But that is a sign of strength. When they're ignoring news that would generally hinder the group, it's showing a lot of strength there. So we're going to watch this one as well to see if it builds any kind of bull flag, and we'll take it from there. Some names that we're building up bear flags, you got Netflix. So this could see follow through tomorrow. This is definitely a name. If you're looking to short, watch tomorrow. If we break below this doji low, that could definitely be a short with high of day as stop. Or if you want to give it more room by sacrificing position size, you could use maybe the high of this range. But just be very careful, because if you are trading contracts, and you use that wide of a stop, that contract's gonna get annihilated. So just food for thought. Other names that we're setting up for potential shorts. Let's just jump over here real quick. I think we have, so pins, that's already a goner. So this is Ribbon, you can see it's bear flagging, right? Into the moving averages. Could look to short it through bear flag low. Ulta's gone. AbbVie, it's rejecting off the 20 moving average. So generally speaking, large or very liquid names like AbbVie, over almost 300 billion and worth, is going to find resistance at the 20 rather than the 10. So this is a great short potentially through this trend line. Ideally, if we go to the 10-minute, let's go to regular hours. Okay, so it looks like this. So really this would be the pivot right here. It's going to be in confluence with pretty close to this uptrend support. So you break through this low. Let's go back to the daily. Yeah, this is a doji. You break through this low tomorrow, that could be a short. J&J, kind of already, the best entry was yesterday. There was a name I'm looking for here. AMD looks like a nice short through today's low. And then Visco. This was the one I think I was looking at. Yeah, so this is also bear flagging at the short-term moving averages. There's quite a bit of, selection for the short side. But for me personally, I prefer trading to the long side. So I'm not too adamant about taking shorts unless we're in a bear market. Then it's a completely different ball game. Then the short side is the most favorable side to trade, so I will be trading it. But in a bull market, not so much. I usually like to sit on the sidelines during corrections. But those are a couple names to keep on your radar. Right now, obviously, things aren't looking too hot after hours for Meta. So we're going to see how that evolves overnight. It's now down 13%. They still have to do their earnings call, which will be around 5:30, I believe. So we'll see if that changes anything around. I really doubt it. It is going to be pulling. If it does sell off tomorrow, it will be pulling into a gap support. Could see a brief bounce. But it's really important that this name holds the 200 moving average, right? If Meta is below the 200 moving average, it's never a good sign for the broader market. You can see here we lost it. This was around the beginning of the bear market. Apple is already below the 200 moving average. Not a good thing. So the more big tech name, also Tesla's below 200. The more big tech names that forfeit pivot. All right, I'm tripping my words. The more big tech names that forfeit very important moving averages, such as the 200, and that is basically putting that stock into its own individual bear market, the more likely the market is going to be near a potential top. So we really want these big tech names to hold that 200 moving average. It's going to be very important how Meta reacts to that area in the coming weeks. So that's what I'm going to leave you guys with. If you have any questions, feel free to let me know in the Discord, but you guys have a good rest of your night.